interesting out-licensing deal is Orchid. K. Raghavendra Rao joins in to talk about that. Raghavendra, morning. Can you just start off by explaining this deal you've struck with Alvogen, what it means by way of a potential upside to you and whether there are payments involved here?
Yeah, thank you and good morning. It's a deal with Alvogen to market 8 of our non-antibiotic oral products in the US market. They pertain to CNS and osteoporosis areas. The current on-patent value of these drugs is about $8 billion. They are sequentially going off patent in the next 2-3 years. So the first of those revenues will start kicking in next year, and Alvogen will exclusively buy these products from Orchid. And even though there is expected to be some competition in any product range for that matter, we think that there's going to be a decent turnover and profitability from this arrangement. And by way of this arrangement, we are covering all our costs. We are having a profit share arrangement, and legal and bio costs also will be shared between the two companies.
Mr. Rao, morning. Could you tell us more about the profit sharing ratio then that you've set with Alvogen, and what by way of a milestone payment are you expecting?
Basically, these 8 products include 3 paragraph 4 first to file, and the balance 5 are also para 4 but 181-day launch. It depends on the individual product because the complexity of patents and our own challenging position in that in terms of non-infringement or invalidity. So the ratios and the payments actually vary across the products. But suffice to say that whoever brings to the table, they get compensated adequately, and we get the milestone payments with reference to on signing we get the money, as well as we cover all our costs, and biostudies and legal costs, particularly for para 4 FTF, can be daunting, and those are also being shared. So I think covering the costs, expecting higher profitability and decent turnover is the basic genesis of this deal.
Do you have any kind of indication then on how this may bump up your revenues in terms of a percentage growth in the coming quarters, and also when these products would get launched?
These products are sequentially going to be launched from next year. So in that sense, in the coming quarters, immediate quarters, there is not going to be an impact on account of this particular deal. But we expect about 15 to 20% annual growth triggered primarily by such arrangements, including that with Alvogen from next year onwards. Because $8 billion market space, even if you factor in generic pricing decline as well as competition, we should be in with very decent double-digit millions of dollars of top-line growth from next year onwards, which will work out around 20% of our present base. But for the coming quarters, there are other triggers which will propel the growth. The full year impact of bulk supply to Hospira as part of our deal for antibiotics, as well as we are looking at certain front-end marketing arrangements in regulated markets to increase our oral products share in the market. So these things are going to ramp up sales in the current year as well.
What is the potential size, Raghavendra? Because as you said, there will probably be a reasonable amount of competition here. I guess we're talking about price erosion of between 40 to 50%. So what would be the reasonable opportunity size to attach to this for Orchid?
I think it will be in the range of between $300 and $400 million over the next 3-year period. The rough back of the envelope calculation is that even if $8 billion product opportunity gets genericized by even 80%, it comes to $1.6 billion. And even if 4 or 5 players are going to equally share this kind of an opportunity, it's going to be at the peak level between $300 and $400 million is my guess.
You've had to scale down your FY11 outlook as well, Raghavendra, both in terms of what happens at the EBITDA level and the revenue level. Are you taking a relook right now or not for this financial year?
Well, FY11, I see a reasonable growth, in fact, over FY10, because in spite of selling the dosage form business of injectables to Hospira, what we sold off is only our portion of what we will take a hit in the revenue is only our portion of the profit share that is going to that has been monetized, but that is immediately replaced by the bulk supply to them. So the net drop in the top line as well as in the bottom line as of March 10 is going to be handsomely made up by full year impact of tazobactam supplies as well as partial year impact of carbapenem supplies, which are going to come off patent, and also ramping up of our oral business in regulated markets. So I think current year itself will see growth. There is not going to be any degrowth compared to FY10.
Any expansion plans in the offing, Raghavendra? There have been reports that you may be looking actively at acquiring some kind of production facility, perhaps overseas. Would you want to confirm or deny that?
We are not looking at any production facility overseas. In fact, all companies are better off having production facilities here, is my firm opinion. But we are looking at some opportunity in the front end, basically marketing outfits where we can sell our own products which are produced here and marketed elsewhere. So we are looking at front end opportunities which are not capital intensive in terms of acquisition cost, but it will help us in extending the value chain. But we are not looking at any purchase of any production facilities outside of India.
Give us an update then on Hospira. You've been talking a lot about how that may increase your potential from here on. What kind of an uptick are you expecting both in margins and in revenue accretion as well?
Yeah, when we did the Hospira deal, it was those products which went to them was generating about $90 million in top line and about $40 million in EBITDA. But as you can understand, the dosage form sale to EBITDA has its own bulk component as well. So the moment we don't sell the dosage form to them, we automatically sell the bulk to them because we have a 10-year agreement with them. So the 90 and 40 is immediately replaced by 40 and 15, means $40 million of bulk supplies automatically happening based on last year's position itself. That leaves only a gap of about $50 million top line, and that is going to be more than made up by full year impact of tazobactam, because we supplied only for half a year where we got the approval in September last year, and full year impact of tazobactam and partial year impact of carbapenem, meropenem and imipenem, for which we are getting the approvals in the next few days. So these two put together will more than make up for the 50 million drop in the top line. So the Hospira deal itself is going to be top line and bottom line accretive. On top of it, the money we received from Hospira, we used to pare down our long-term debt completely. So the interest impact on that is also going to be beneficial for the company. So all in all, I see a robust growth in turnover and profitability in the current year.
How much by way of interest cost are you expecting to lower this time around? And your long-term debt is quite huge. How much would you retire?
We have already retired the entire long-term debt of 1,400 crores. So what we are left with now is only the short-term working capital and the FCCBs which are maturing in 2012 for most part. So our debt-equity ratio, which was more than 4.5:1, all debt divided by the equity and the shareholders' funds, has now come down to 1.1:1, which is a very, very manageable number. And we don't have any long-term debt in the net of cash and cash equivalents as of March 10. So the interest impact on 1,400 crores of repayment obviously will be about 130 to 140 crores in the current year.
Thanks, Raghavendra, for joining in. That's Orchid Chemicals say that the upside potential from this deal with Alvogen could be between $300 to $400 million. Maybe looking at some kind of facility buy, but no confirmation yet. The stock is up about 1%. We're going to take a